Hello there, Internet! Welcome to another exciting episode where we delve into the latest and greatest in the world of technology and finance. Tonight, we're diving into the fascinating world of cryptocurrency, specifically a project that's been generating a lot of buzz lately, PiNetwork. If you haven't heard of it yet, you're in for a treat. Now, PiNetwork isn't exactly new. It's been around since 2019, but it recently hit a major milestone, the launch of its mainnet. This is a significant step forward for the project and its community. For those who don't speak crypto, mainnet basically means Pi is open for business. It's the moment when a blockchain project transitions from a test network to a fully operational network. It's like graduating from those little plastic training scissors to the real deal. The project is now ready to be used in real-world applications. People can now actually trade Pi on certain exchanges. This means that the digital currency can be bought, sold, and exchanged for other cryptocurrencies or even fiat money. This is a big deal, folks. The ability to trade Pi adds a whole new level of utility and value to the project, but hold your horses because this is just the beginning. The launch of the mainnet is a significant milestone, but there's still a long road ahead. The launch has brought a wave of excitement, but also a lot of questions. People are curious about what this means for the future of PiNetwork and how it will impact the broader cryptocurrency landscape. What's the price of Pi? This is one of the most common questions being asked right now. The value of Pi will be determined by the market, and it will be interesting to see how it evolves over time. What does this mean for the future of the project? The mainnet launch is just the first step. The team behind PiNetwork has ambitious plans for the future, including further development of the ecosystem and expanding its user base. Well, buckle up because we're about to break it all down for you. We'll explore the potential implications of the mainnet launch, the challenges that lie ahead, and what this could mean for the future of digital currencies. Stay tuned. Alright, let's talk numbers. When it comes to the world of trading, numbers are everything. They tell the story of the market, the trends, and the potential future, but numbers can also be elusive, especially in the volatile world of cryptocurrency. As of today, May 8, 2025, Pi is trading at, well, we don't actually know. The cryptocurrency market is notorious for its lack of transparency, and real-time data can be hard to come by. This makes it challenging for traders and investors to make informed decisions. That's because the price information we have is only from the initial launch back in February. At that time, Pi made quite a splash in the market. The initial excitement was palpable, with many investors jumping on the bandwagon hoping to strike it rich. Back then, it was going for around 89 cents with a daily trading volume pushing almost $1 billion. This kind of volume is impressive for any asset, let alone a new cryptocurrency. It showed that there was significant interest and belief in Pi's potential. Now I know what you're thinking. John, that's all well and good, but what's Pi going to be worth in the future? This is the million-dollar question, or perhaps the $25 question, depending on who you ask. Predicting the future value of any cryptocurrency is a complex task. And to that I say, I'm a comedian, not a fortune teller. While it's fun to speculate, it's important to remember that the market can be unpredictable. Even the most seasoned analysts can get it wrong. Seriously though, nobody knows for sure. The market is influenced by a myriad of factors, from technological advancements to regulatory changes, and even global economic conditions. All of these can impact the value of Pi. Some folks are predicting Pi could reach as high as $25, which would be a significant increase from its initial launch price. This optimism is often driven by the potential applications of the technology behind Pi and its growing user base. While others are more cautious, they point to the volatility of the market and the fact that many cryptocurrencies have seen dramatic rises and falls. It's a reminder that while the potential for high returns exists, so does the risk. It's like trying to predict which intern will be the first to crack under pressure and shave their eyebrows off. It's anyone's guess. The world of trading is full of surprises, and sometimes all you can do is sit back, watch, and hope for the best. So whether you're a seasoned trader or a curious newcomer, remember to stay informed, stay cautious, and most importantly, stay entertained. So how did we get here? PiNetwork was the brainchild of some Stanford folks who wanted to make cryptocurrency more accessible. Their big idea? Mine crypto on your phone. No need for fancy, expensive equipment. Since its launch in 2019, Pi has amassed millions of users. That's right, millions! It's like the Pokemon Go of cryptocurrency, but hopefully with less trespassing and public urination. The team behind Pi has big plans for the future, including building out their own ecosystem of apps and services. Think of it like Apple, but instead of iPhones, it's, well, Pi. Okay, let's talk about this whole mining on your phone thing. Pi uses a system called the Stellar Consensus Protocol. Now, I'm not going to bore you with the technical jargon. Just know that it's designed to be energy efficient, unlike Bitcoin, which uses more electricity than some small countries. PiNetwork also has this whole social aspect to it. Users can earn more Pi by inviting their friends, kind of like a multi-level marketing scheme, but without the awkward dinner parties and essential oils. Section 5. What's driving Pi's value, the forces at play? Now let's get down to brass tacks. What actually determines the price of Pi? It's a question that many in the cryptocurrency community are eager to understand. The value of Pi, like any other cryptocurrency, is influenced by a myriad of factors, each playing a crucial role in shaping its market dynamics. Well, it's a whole bunch of things. To start with, the overall sentiment in the cryptocurrency market is a significant driver. When the market is bullish with positive news and investor confidence, the value of Pi can see an upward trend. Conversely, during bearish phases, negative sentiment can lead to a decline in its value. First, there's the overall sentiment in the cryptocurrency market. This sentiment is often influenced by major players like Bitcoin and Ethereum. When these giants perform well, they tend to lift the entire market, including Pi. On the other hand, if they face downturns, it can create a ripple effect, impacting Pi's value. If Bitcoin catches a cold, the whole market tends to sneeze. This analogy highlights the interconnected nature of cryptocurrencies. Bitcoin's performance often sets the tone for the rest of the market, making it a critical factor in determining Pi's value. Then there's supply and demand. The basic economic principle of supply and demand plays a pivotal role in the valuation of Pi. With a limited supply of Pi coins, scarcity can drive up the price, especially if demand continues to grow. Pi has a limited supply, which means the price could go up if more people want to buy it. As more users join the Pi network and the demand for Pi increases, this limited supply can lead to higher prices, benefiting early adopters and investors. And of course, there's the development of the Pi ecosystem. The growth and expansion of the Pi ecosystem are crucial for its long-term value. The more developers create innovative applications and services on the Pi platform, the more utility and demand Pi will have. The more apps and services that are built on Pi, the more valuable it could become. This ecosystem development not only enhances the usability of Pi but also attracts more users and investors, further driving its value. In summary, Pi's value is driven by market sentiment, supply and demand, and the continuous development of its ecosystem. Each of these factors interplays to shape the future of Pi in the ever-evolving world of cryptocurrencies. Section 6. Building the future. Pi's ecosystem and its potential. So what's next for PiNetwork? Well, the team behind Pi is working hard to build out its ecosystem. This includes developing decentralized applications, or dApps, which are basically apps that run on a blockchain instead of a central server. They're also partnering with businesses that will accept Pi as payment. Imagine buying your morning coffee or paying your rent with Pi. The future is now, or at least it could be soon. Section 7. Pi Network. Separating fact from fiction. Now, with all the hype surrounding Pi, it's important to separate fact from fiction. There are a lot of rumors and misconceptions floating around out there. Some people think Pi is a scam, while others believe it's going to make them millionaires overnight. The truth, as always, is probably somewhere in between. Remember folks, if something sounds too good to be true, it probably is. Always do your own research before investing in any cryptocurrency, especially one as new and untested as Pi. Section 8. Challenges and risks, navigating the uncertain waters of Pi. Let's not sugarcoat things. Investing in PiNetwork isn't without its risks. The cryptocurrency market is volatile and Pi is still in its early stages. There's no guarantee that it will be successful. The project has also faced its fair share of criticism. Some people are skeptical of its mobile mining model, while others are concerned about its centralized nature. And let's not forget the regulatory hurdles that cryptocurrency projects often face. Section 9. The final word, your PiNetwork journey, starts with you. So, there you have it folks. PiNetwork is a fascinating project with a lot of potential, but it's not without its risks. Ultimately, the decision of whether or not to invest is up to you. Just remember to do your research, be aware of the risks, and never invest more than you can afford to lose. And hey, if you do become a Pi millionaire, don't forget about the little people. Or at least the guy who explained it all to you on YouTube.